Well, good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for September 21st, 2018. Well, hey, congratulations. It's Friday. We made it through another week, and the market, man, it has really been on a tear. Those bulls just fired up big time after the tariff news came out. Everybody just decided they didn't care about the tariffs, and we really ripped higher. Dow Jones rallying over 575 points in just 3 days to break a new and to make a new all-time record high, pumping out there and showing strength while it did that. Yesterday on an intraday chart, if we take a look at that, gap up, a little rest right here for, about an hour or so. Just kind of resting in here, and then just that slow push and grind higher this morning, looking up and never really taking a dip back of significance. So very, very nice move up yesterday, looking really, really strong. Now we left a substantial gap behind, and that might be a little concern if the market is overextended. And I am just a little bit concerned that the diamonds or the Dow actually, kind of let exuberance get ahead of, common sense maybe a little bit, and that we may have overshot for just the short term. Now, there's nothing here in this chart that suggests bearishness, and I don't want anyone to think that I'm talking bearish. I'm just saying that it may be a really good opportunity to be taking some profits in the market because we could see a rest or a pullback in the relative near future. So kind of keep an eye on that. Currently, the futures this morning are just slightly bullish here on the Dow with a push up. We had Asian markets close all strong overnight. We have European markets all showing strength this morning. And so currently the Dow is pushing higher. Now, keep in mind that today is quadruple witching day, which means index options, stock futures, stock options, all of those are going to be closing or expiring today. So we've got lots of expirations going on, which means that we could have a bit of a higher volatility in the price action today. So watch that. It typically results in a little bit higher volatility, some odd price action, as the big institutions and everything have to shift around positions. So there can be a lot of just weird movement in the market. Now, we have rallied, obviously, very, very strongly. Remember, the weekend is coming, and also remember that we have the FOMC meeting next week, where I think it's fairly widely expected that we're going to see an interest rate increase. So kind of keep that in mind as you plan your risk forward into next week. I, for one, took advantage of this big rally yesterday. In fact, one of the mantras that we use at Right Way Options, Hit Run Candlesticks, is gaps are gifts. And when I get a gap in the market and that big, strong, bullish move, I'm usually looking for a way to take some profits. And I did that yesterday in a fairly significant way, and I will continue that this morning, just trying to pack away some gains ahead of the weekend and ahead of that FOMC, which could turn the market into just a little bit of choppiness. I wouldn't say bearishness here because there's nothing to show that. Let's take a look at the SPY real quickly. SPY looking really good as well. It didn't want to be left out yesterday. Moving up through this resistance area up here, solidly moving up, holding its trend up really well. New record highs in the SPY as well, and a big breakaway move in that higher run that we had yesterday. Once again, if you look at a short-term chart, there was just no pullback yesterday. Now, if you're looking at this and say, now wait a minute, why is the SPY indicating lower this morning? As you can see, the SPY is indicating to open down here. Well, that's a dividend payment. And dividend payments are coming out in these indexes, and we could see that fluctuation here in the market just simply because it was time for the SPY to pay out their dividends. So watch those. They do move the markets around a little bit. So nothing bearish here, just gapping down because of that dividend payment. Let's take a look at the Qs. Now the Qs did a really good job yesterday, perking up here nicely. We did end up holding this this upper range, which is good. We got back above that key support level. And as you can see, what we did is we rallied strongly, testing this resistance level right here, that lower high of last week. We really need to see that break, but it would be perfectly acceptable if we happen to see the Qs kind of rest across here, or even pull back a little bit. As long as it holds that key support area, this still has that opportunity to move higher. So preference would be to see this move on through, but if it can't do that today, I don't think there'd be any particular worry with that now that we're back above that key support level and holding on. Let's take a look at IWM. IWM found buyers yesterday as well, kicking right up through that key support level that we have talked about. That level pretty important to IWM, and you can see IWM is just moving up nicely, holding into its trend, and so moving back up into this key area. We could see this now continue to bounce around in that range, this consolidation range, but that's okay. It's perfectly acceptable to do that as long as we hold on to those key levels, and we've certainly did that yesterday. We've shown lots of bullish strength here in the market. Let's take a look at the VIX real quick. Yesterday I had mentioned that I was a little bit worried that we would gap up and potentially pull back. And of course that didn't happen. I said, wait for proof that those bulls are going to continue to follow through. And they certainly did do that. It took maybe about an hour before after that gap and a little bit of bouncing around before they decided to push on higher. But as you can see, as a result, we dropped down yesterday dropped below this support area, but we ended up leaving the day here with a little bit of a bottom type pattern here in a candle, a little bit of just concerned, not over concerned, just that fear kind of creeped back in here just a tiny little bit at the end of the day, rallying this back up. So we'll have to watch this close. We could get a little bounce off of that area, and that's perfectly okay. That doesn't mean anything's bad. But we do want to watch for the potential that we had just simply maybe an over energetic move to the upside, and we might need a little bit of a rest or a little bit of pullback to absorb those new prices. So this is currently downtrending. You can see nice downtrend going on here, lower high, lower low. That's what we need for a downturn. So nothing terribly awful here to worry about. Just pay attention that we could peak up here a little bit today. A little bit of fear maybe coming in, and not much, but just a little bit. Let's take a look at T21.22. Now T21.22 yesterday was really odd that the day before that the market had moved up sharply, but T21.22 had not responded. Well, we got that big response yesterday, moving up sharply in T21.22. So kind of keep in mind we still have good room up here before we reach that bearish reversal zone in T21.22. We also have significant potential move to the downside. Let's hope that doesn't occur. Let's hope we can continue to carry higher here in the market, because I know most folks just kind of tend to want to be bullish on the market. So let's see if that can carry on up here this morning. Let's take a quick look at the economic calendar, which isn't much to look at today. We only have 2 items on the economic calendar, neither of which would be expected to move the market. PMI composite flash out at 9:45 this morning, and then the Baker Hughes rig count this morning. And also on the earnings calendar, there's only 2 companies expected to report earnings, and neither one of those companies would be market moving events at all. Both of them happen after the market close. ELLO. I don't see that doing much anything to the market. And NTZ also reporting after the market. So penny stock and a utility that really doesn't have much going on. So not much happening there, which means that the market is going to be kind of left to its own devices today, and that quadruple witching going on. There won't be any real major drivers in the market. So heading into that weekend, remember, always be thinking about taking some of those profits, reducing that risk into the weekend. Expect some higher volatility in the market today. Could be a little bit whippy, could turn into being extremely choppy. Watch that closely, and be always focused here at new highs for the potential that we could get those clues of reversal or pullback or consolidation up here at the highs. So watch that closely. With that, everyone, hey, I want to wish you all a great day. I want to wish you great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube. Follow me button on Facebook. Click those thumbs up buttons and drop a comment. I really do appreciate it. And everyone, please always feel free to share this video with any friends and family. So I don't put any ads on these videos. I never intend to make money from these videos. These are truly to help other traders be successful and do a better job at preparing for their market day. So please feel free to take advantage of those. Everyone, I want to wish you all a fantastic weekend. We'll see you right back here bright and early Monday morning. Take care, everyone.